Alright. Thank you guys so much for tuning into today's video. Today I want to be recapping a trade that I took here on Monday, February 24th, 2025. So, the trade that I took on Monday was based off of this higher time frame objective here. So, on the daily dealing range, right, there is this rather large down close candle, right? So right here, and from this daily dealing range, right, from this swing low to this swing high, there is a dealing range, and a dealing range consists of equilibrium, premium, and discount. So discount would be this green box right here, right? And premium would be considered this box right here. Alright, so if you are looking at this as a regular market, right? If you are a buyer, you want to be buying in discounted prices, right? And if you're a seller, you want to be selling when prices are high, so you can maximize your profits. So in the case of the actual stock markets, it's the same thing too, or in the futures markets, per se here. So right, swing high, swing low, swing high. That 0.5 level right here indicates is basically it separates premium or discount and premium. And let's pay attention to this daily candle here. So that daily candle is telling me that we're most likely going to take out the daily low. Not only should we continue lower to take out the daily low, but we should continue lower after taking out the daily low. We should continue lower to retrace back into discount. If there are buyers here in this market, it would make sense for prices to trade down into discount, and we have yet to trade back inside this discount level here too. So I have a higher time frame objective, which is for us to retrace back into the discount of the daily dealing range, and my model, the power of 3 that I'm using to align myself with this higher time frame objective, is the bearish daily candle, right? So both of those time frames, the daily dealing range and the daily model, they're both telling me that we should continue lower. So now all I need left is some sort of entry pattern, right? So I do want to clarify here that the daily low here in this case was also the same low as the weekly low. Or let me just rephrase that. The weekly low is the same low as the daily low. So that means we should complete the weekly objective within the next day, right? And that concept is just called scope. So now, like I said, I have a higher time frame objective, I have a model. I'm going on to the 4-hour time frame, right? To find some sort of fair value gap. So here on the 4-hour time frame, notice how we opened up here, and I spoiled that trade just a little bit there for you guys. But notice how we closed on this candle here, right? This is, by the way, this is Sunday's opening price, that weekly open. The way that we closed on this specific 4-hour candle, it gave me the opportunity to use this 4-hour fair value gap right here as an entry pattern, right? The way that we closed here on this 4-hour fair value gap, or not 4-hour fair value gap, but the 4-hour candle, suggests to me that we're most likely going to retrace back into this fair value gap. Initially here, I can't use this 4-hour fair value gap as a entry pattern, right? Because this fair value gap should be treated as a breakaway gap. But whenever we opened up here on Sunday, we created this 4-hour candle, and this 4-hour candle closed above this. I'll make that a green line. This 4-hour candle closed above this fair value gaps candles low. Kind of confusing, but I have another video coming out just to I'll go over more about when a fair value gap should be treated as a breakaway gap and when it should not be. But yeah, as soon as we created this type of candle on this specific candle right here, on this 4-hour candle, that's when I took my entry. And because it is a daily model, because I'm taking this trade based off of the daily time frame, I'm going to allow myself a full day worth of trading to be a part of this model, right? And we end up doing a lot more than like we could have, right? We, like I said, we retraced back into this 4-hour fair value gap. We took out the weekly low. After taking out the weekly low slash previous day low, we retraced back into the discount of the daily dealing range. And that was the trade. Some honorable mentions I do want to talk about in this specific trade too is that there was a lack of SMT here between NQ and ES at the lows, right? So all of these swing lows here, if you guys look at it on ES, we have yet to have any SMTs here at these lows between NQ and ES. Because there is a lack of SMT, that shows me that there's a willingness to continue lower, right? A strong high and a strong low will always be accompanied with SMT. But because this swing low here was not accompanied by any SMTs, I actually was able to use that as a confluence for lower prices, right? Let me go over that again. Because there was a lack of SMT at that swing low here there that I noted out right here. Because there is a lack of SMT, I can see an urgency for lower prices. And yeah, that basically wraps it up for the trade that I took here on Monday. Pretty simple trade. I mean, like I said, weekly or I guess daily objective, which was for us to retrace back into the daily dealing ranges discount level, because sellers or buyers are always going to want to buy in discount, right? And vice versa, sellers are always going to want to sell in premium. So I go from the daily higher time frame objective onto a daily model. Going from the daily model, I had a 4-hour fair value gap or a 4-hour entry pattern. And like, this is probably one of the more cleaner trades here, to be honest, I guess of 2025 so far. Yeah, thank you guys so much for tuning into today's little recap. Very, very simple trade. If you guys want to join the Discord, it will be in the link in the bio. And until next time, be safe.